In this video, we will be talking about the excise tax enforced at the state level. The first type of excise tax is known as the benefits-based tax, and it includes items such as gasoline. The average gasoline tax, which includes both state and federal, is 48.88 cents per gallon. States where the tax are in this bracket are considered higher than average. States where the tax are in this bracket are considered lower than average. You can see that every state taxes gasoline, but the gasoline tax can vary greatly from California, which combined with the federal tax makes it the highest in the nation, to New Jersey. Finally, there's another type of excise tax, the sumptuary tax, aka the sin tax. These are taxes that are leveraged on items such as smoking, alcohol, and casinos and gambling. Like gasoline, the federal government leverages a tax on cigarettes and alcohol. States then impose an additional tax on those services, and the rate of tax can range from state to state. But as illustrated in my video on tax basics, increasing the taxes on these services has only a minimal effect on revenue. Casinos and gambling can represent another way to make revenue. A long time ago, casinos only existed in 2 states, Nevada and New Jersey. By 2011, the number of states operating casinos had expanded significantly. The way states collect revenue depends on the types of casinos. For instance, casinos operated by Native Americans have a special status, and all revenue must be negotiated with states. Non-Native American casinos, on the other hand, are taxed on a graduated flat rate based on their state. Fortunately, we have this semi-reliable chart from Wikipedia that shows the breakdown of gambling and its legality from state to state. Now on to another form of revenue, lotteries. Currently, the lottery is implemented in 44 states. The states that do not have lotteries ban them on religious grounds, don't want them competing with their existing gambling industry, or really have felt no need because they are not part of the contiguous United States and therefore have limited competition. There can be good news and bad news about lotteries. The good news is that lotteries can always be a reliable source of revenue. Even during the recession, lottery revenue tended to stay the same for states. The bad news is that lotteries are not a significant portion of revenue. Most states reserve funding or earmark revenue from lotteries for specific services such as senior services or education. The problem is that over the years, the needs in education and senior services have increased, and sales from lottery proceeds have not increased to match those funding goals. Some states have toyed with the idea of privatizing the lottery or leasing them out as a means of gaining more money. Though a good source of revenue, lotteries and other sin taxes are not without their source of controversy. The biggest criticism are that these taxes are regressive in nature, in that they affect low-income families more than other middle-income and high-income families. In addition, one has a higher chance of surviving something like this than winning the lottery. John Oliver did a special on some of those overall issues and limitations with lotteries in his special Last Week Tonight. Okay, something to think about. Is it ethical for states to make money off of people's vices? Want more video updates? Or do you just want my social security number? Be sure to subscribe!